Welcome. It's Tuesday, August 2nd. Hope you're having a great day out there. I've been better. I'll be honest with you. Been better. We've seen brighter days in the mortgage landscape, that's for sure. Going to take a look at rates jumping today. Got a few things. This was the first thing that jumped out today. I'm going to run through a few articles today. Be a relatively quick video. I'm going to show you the TA on a couple things. Mortgage bonds, particularly the Dow Jones, unfortunately slid back into the downtrend. So we escaped the downtrend and slid back into it today. So it'll be interesting to see how stocks react to that. Could be an absolute nuke fest tomorrow. Or, some of the late earnings reports today were good. So it's hard to say what'll happen with that tomorrow. But job openings fell sharply in June as labor market shows signs of slowing. This is pretty accurate assessment of the situation. It's important to look at the details. The summary here is pretty good. Total of employment vacancies fell. So number of jobs that are open fell, not people losing their jobs. Some people mishear this or misrepresent this as being people losing their jobs. No, the number of job openings has decreased. There's several reasons why that could be the case. But even with this very sharp decline, there's still 1.8 jobs open for every available worker. Now, that may not be exactly accurate, but just historically speaking, it's still pretty good. The labor market is still really strong, even though we had kind of this bumpy number here. But these are the things I'm watching most specifically, and I know the Fed is watching most specifically too, is particularly actual jobless claims, lost jobs, and then just this ratio here to the open market of applicants or people who are available to work and the number of open jobs. So we still have way more job openings than available workers. Is that number 100% true? Even if it's off by a factor of 2, we're really close to having the same number of job openings as we do workers. So that this is still not a non-issue. You know, people tried to make it an issue today. This is not an issue at the moment. But we're going to keep an eye on this stuff. We're going to be honest with ourselves about everything, guys. Good stuff, bad stuff, all of it. And today there is today the soup is cold. It is, but it isn't always like this. Just so happens that today is one of those days. Household debt top 16 trillion for the first time, fueled by higher inflation and interest rates. Household debt, 16 trillion. Mortgage balances rose by 200 billion. Now we're at 11 trillion for that. Credit card balances surged. Watching very closely that stuff right there. It's the largest gain in more than 20 years. So a lot of money going on, or a lot of stuff going on to credit cards. By the way, we are live on everything: Facebook, the Twitter universe, the Twitterverse, YouTube, all that. So drop a comment or a question, and I'll go over those. I know some of them aren't populating in. People have said they've been trying to comment. It's not working. So I apologize for that. I really don't know how to fix that. Just comment if you can, and I'll get back to everybody, and we'll get to those a little bit. So seeing some debt stuff here, increasing debt stuff. We would like to see these debts decreasing, but part of the reason why you're seeing mortgage balances increase, look, if mortgage balances increase, 2%, think about property values have gone up 20%, 2 years in a row. So really the overall loan to value, we talked about how there's $11 trillion in actual equity right now. So think about that. If there's 11 trillion in equity, and the total of all the mortgage balances is about 11 trillion, where as a whole, as a nation, about 50% LTV. That is a very healthy place to be as a nation. Very, very healthy place to be. So again, I don't see too much with this, but the total debt hitting records and stuff like that, that's going to happen as time goes on, especially with inflation. Numbers just get bigger. And so it's not too much of a concern, but we're going to keep a close eye on this, particularly the credit card stuff. Things usually happen with the credit cards first. People will make their house payment. People will make their rent payment. People will make their car payment. If people are going to start struggling, if that's going to be a macro trend, it's going to start with the credit cards. That's where we're going to see the first domino. So we're going to keep a close eye on that. San Diego's in the news, guys. I don't know if you saw this or not. I'm going to get to mortgage rates here in a second. It's just the bad news. I don't like to start off with bad news. I probably should. Rent prices are soaring. These 5 U.S. metros. That's what I've been telling you. Been telling you for so many years here in San Diego. We're going to have some of the highest rents here in the world, and it's just we're just finally on the map. Look at this: top 5 metros, most expensive monthly rents: Los Angeles, San Diego. Dang, particularly Carlsbad. And we're higher than San Jose. That's crazy. Oxnard is up there, Thousand Oaks, expensive areas. Connecticut, don't know anything about that area, but look at this. Southern California, Southern California, Southern California, Southern California. Why? Well, because it's a beautiful place to live. It's the best place to live in the entire world, in my opinion. I've been everywhere that is comparable, so I hear. And this is the best. Renters, typically people who are younger, who would look for that type of lifestyle, the outdoorsy lifestyle, if you will. They're gravitating to these areas. So, San Diego making the list number 2 here. Carlsbad, $4,600 for rent. You can't get a whole lot for $4,600 for rent, but that's what it is. So, isn't that crazy? So we look at rents. We always talk about the opportunity that's lost in renting. But essentially, you're shorting the real estate market when you rent. This is a big deal right here to see that, look, rents are still chugging along. Even if property values go down, think about this. As buyers say, you know what, I'm passing on this. I think the market's going to crash. I don't want to. They become a renter. They fuel the renting demand that drives rent prices higher. That's why my prediction was that rents would soar this year, as so many people who would be buyers say, you know what, we're going to rent for a year and just see what happens. So many people saying the exact same thing. It's really an interesting thing to watch how an entire society will do the same thing at the same time, even though they're not talking to one another. Sociology, I believe they call that. It's really interesting to watch. A lot of people saying that same thing. I think what you will see is you will see rents go up. Maybe you'll see prices go down. We've seen prices come down a little bit. I talked about that specifically yesterday. Let's get into mortgage rates. What happened today? Okay, it's a big, ugly number, guys. I'm sorry it took me so long to get to it. I've been putting it off because, well, frankly, hated it. One of those days. 83 basis points down. And it was a lot worse too. I mean, at the lowest point here, sorry, I did an analysis for a rate lock video just a little bit ago. When you lock your rate with me, I always go through and explain to you exactly what our strategy is to help make sure you end up with the best rate. And as a broker, we can flip banks. So if rates improve after we lock with bank A, we can always flip it to bank B. Well, we have this very nice channel moving us higher here. That was broken today. But it was a lot worse. At one point, we were down here. We were down over 100 basis points. Yikes. It was bad, really bad. And what's really concerning about it, honestly, is that I really don't know why. I can't explain to you what caused this. This is just flat out selling. Now, we've had a nice run up here from the bottom. So it's been, it's been a good run. I mean, we've gone from, what is this, 99.5, to almost 102, 250 basis points, pretty much straight up. We were due for a pullback. We were due for a pullback, but that was a pretty ugly one. And it caused rates to go up a lot today, quite a bit, at least 0.25% to 0.5% in some cases. It's a big blow to take in one day. It's a big blow to take in one day. It doesn't mean that that it's game off. If you look at this very closely, this actual channel that we're in, we still actually stayed in it with that closing, just barely in it, but we're still in it. So we haven't given up the bull channel, even though we had a really bad pullback. In fact, the buyers who stepped in toward the end of the day pulled us back up into the channel. And so that's usually a pretty bullish sign of whichever way you end the day, kind of tends to tell you which direction the market's leaning. And so, we ended the day relatively strong today. So we'll take that, right? All right. But if you're locking rates, if you have a deal to lock today, which I did, you got to lock it, because if this breaks, rates could pop. Rates could definitely pop up. We are now vulnerable to that. We're vulnerable to that. Another 80 basis point down day, and we're going to be seeing some much higher rates. We're back down here where we had found all that support before. So I hope that isn't the case. It kind of just feels like the market just took a day off, was just sort of like, you know what? Please. See you guys tomorrow. You have fun with today. Thanks a lot, you jerks. Going to be doing some in-studio stuff tomorrow. FTC just hit open door with a $62 million fine for misleading. I like how it's in quotes, misleading people. about the true cost of its home buying business. Here's what they said. And I want you to know what this is, because there are a lot of, real estate is becoming corporatized. I've been trying to explain this the best way I can. Institutional homeownership, we went through that 18% highest on record. And when I ask people what percentage of homes do you think institutions own or corporations own, they'll usually say, oh, maybe 1 or 2%, 3 or 4%. It's 18. In 20 or 30 years, it'll be 50%. Eventually, it'll be close to 100. That's what's happening. Wall Street wants all the real estate, guys. They want it all, and they're coming for it. And this is just one example of it. Now, these companies are dangerous because to them, everyone's just a number on a spreadsheet, just a name and a number on a spreadsheet. You don't really there's no value to you, and there's no one for you to go back to and say, oh, hey, you are my neighbor and you screwed up. You have to answer to something. There's no one who's going to answer to you. So they said $62 million fine. They said that Opendoor misled home sellers by telling them they would make more by selling to it. What they mean by to it is to Opendoor. So they were telling sellers, hey, you'll make more money if you sell to us than if you go on the market. Obviously incorrect. Everybody knows that that's BS, right? But obviously on open market, giving your home, putting your home on the open market and giving it some market time is the best way to expose it to the most people. It's the easiest thing to do, the best way to do it. Selling directly to an investor is not the way to get top dollar. That's the way to make the quickest sale. If you need money, if you need fast, if you want to be done with it, you're not interested in anything other than just, hey, get it off my hands. That's what investors are supposed to be there for. However, when Wall Street, when big companies get involved in this, what do? It's all about sales. It's all about numbers. Got to get more, growth. And they'll run people over. And that's what they did here. They ran people over. Well, I'm glad that the FTC was able to get $62 million. I wonder if they're going to give people how much money they lost in their homes. Are they going to give people their homes back? So the company disputes the allegations, but they said that we dispute the allegations, but we'll stop doing it. Oh my gosh. What a joke. Here is what I was talking about earlier. So this downtrend that we're in, this is the Dow Jones. Okay, we're in this significant downtrend here, and we escaped it a couple days ago, right here. We escaped it, and then today we came back into it. So that is not ideal. That is not ideal. This means that there's a lot of downside nuke potential here in the stock market. And I hope that doesn't take place, because I literally covered on my short on this day. Like, okay, hey, we're out of the channel. Like, if we bounced off the channel, I would have kept it. But we escaped the channel, and, here we are. So that's great. Hopefully I drew the lines correctly. Maybe I didn't. But at the end of the day, we're for sure back into the downtrend. And so for stocks, that's not great, but that really should be good for bonds. And that's why I'm so puzzled by today. And we see sort of a selling situation going across the board. That's usually good for bonds, usually helps put some money there. Issues with jobs are kind of the top headline in the morning. That usually is good for bonds. I'm really perplexed by this. Maybe we'll find out the next time we hear from the Fed that they're selling some of those bonds I was telling you about. If we do, then we are definitely screwed. If that's the case, we are definitely screwed. And I really hope it's not. I don't think that it could be. I don't think there's any way that it could be, but somebody sold a lot of bonds today. Okay. Okay. Well, Trisha, thanks for your question. That's one I really can't answer. I don't know why. That's sort of a politics thing. Why is Nancy Pelosi's visit to Taiwan such a big deal? I think there's concern about China and China wanting to, tighten its grip on Taiwan and the Taiwanese people. And, so there's some potential conflict there. The biggest risk to everything, including our lives, our economies, everything, is a nuclear war. We obviously already in like a Cold War type situation with Russia. And so with that being the case, there's a lot of concerns about that. So when you see someone sort of going over there instigating now, we could be in a bad situation with China. it does cause them, and maybe that is what the reason was. Maybe it was the Chinese who sold these bonds. I don't have the answers today. I do not know why we sold off so bad. It doesn't make a whole lot of sense. Is it a buying opportunity? We'll find out. Somebody sure thought it was at the end of the day here. We don't know who that was, but someone stepped in there and bought when it was real ugly. So at least we have that going for us. But overall, right now, this is why I've been telling people to get your rate locked in, particularly the last few days. Rate's super low. You never know how long it's going to last. This cycle that we're in, it's a very uncertain. There's a lot of uncertainty. I believe that we are on the other side of the inflation trade, but that doesn't mean all the problems are behind us. Inflation isn't the only problem that we've got. There are other problems too. I don't think any of them are big enough to cause any type of real estate crash, but the stock market has already sort of crashed, right? Stock market's already down more than 20% top to bottom. So we essentially have already gotten a recession signal from that. We're technically in a recession as well. So with all those things added together, yeah, there's some uncertainty out there. Yeah, there's some geopolitical issues out there. And maybe it's all just sort of culminating into this. I'm not sure. But it is what it is for now. And here's what I would encourage everyone to do, especially for people who are interested in like finding a good deal, on a home. I can get you a loan quote very easy, by the way. You don't have to pull credit or do anything. You can email, text, call me, whatever. We can get you a loan quote. Make sure you know what a good rate looks like for your situation. If you want to get pre-approved, we can do that very quickly and easy at DerrickEvans.com. Same as my email address. And get you pre-approved so you can be in position to strike while the iron is hot. I got one into contract today, and man, if we'd have gotten a contract yesterday, literally would have been 0.3% lower rate. That's how much timing matters. And so while we'll still try to obviously help them get a lower rate throughout the process, if rates dip, you never know. You never know what's going to happen in these markets. So get yourself pre-approved, get yourself in a position to strike, make sure you're getting a decent deal here. I saw these guys promoting. What were they promoting? Where is it? Oh man, I lost it. I thought I had it pulled up. They were talking about, these are the 4 best mortgage banks or something like that. Ah man, where is it? There it is. 4 of the best mortgage lenders that don't charge origination fees. Let's see here. Get out of here. Let's read through this. Ally Bank. Okay. Online bank, difficult to get a hold of. Try to get statements from them and stuff all the time. It's a total mess. They're saying they go down to 620 credit. Don't charge application fees, origination fees, processing fees, or underwriting fees. The lender may, however, charge appraisal fees, recording fees, as well as other stuff. So not quite as good as it sounds. Penn Fed, credit union situation. Credit unions, they have their place. They really do. But it says a variety of mortgages with no lender fees, no origination fees, other types of fees may apply. So the whole thing of this, lenders that don't charge origination fees. And when I hear, origination fees, I'm hearing all fees, right? Like we're not charging you any fees. Like we don't charge you any fees. I would expect that when you're saying no origination fees, that's what you mean. No, other types of fees may apply. Okay, got it. Better.com, been up again. By the way, I would love to go up against any of these banks. If you have a quote from one of these banks, holler at me. Let me show you first of all, what real quick, solid customer service looks like, but also what a really good deal looks like. Minimum down payment with these guys, 3.5 with FHA. Everybody's got that. Mortgage lending and refinancing service that boasts lower rates. Okay, good to know. So I beat you. According to the lender's website, since agents won't earn a commission from your home loan, the company is able to pass those savings on to its customers. Agents aren't supposed to get a commission on your home loan anyway. Lender doesn't charge any origination fees, application fees, underwriting fees. Other fees may apply. Uh-oh. It's in the fine print, my friends. Navy Federal Credit Union. Love Navy Fed. Great bank. Terrific bank. Mortgages. Hit and miss. Hit and miss. They have some cool products, that's for sure. But I've never seen a Navy Fed deal, and I've seen a lot of them, that have no fees. Never seen one. So the fact that they're on here, no origination fees, let's see what it says. Let's see. 4% has similar guidelines to VA. Okay, so they're not even talking about the fees here. Fees. Common fees associated with mortgage applications include. Okay, so here it is. I didn't know it was this good. I swear to you, I didn't know it was this good. Fees. Common fees associated with mortgage applications include origination fees. Right there. So, of the 4 best lenders who don't charge origination fees, this one claims right here in the article that they do. So, guys, listen. I mean, you can take people's word for it. You can listen to some ad if you want to, but reality is, you want a good deal these days. Mom and pop's actually better. These big corporations have big bills. You know, people like myself work from home. I don't have hardly any bills at all. That's how we can offer such good deals. Thank you, Sandra. Said, you're right. You're super quick to respond. Very true, because speed is important. People want speed. I tried to go help my daughter open a bank account earlier. We sat in the lobby for 30 minutes. I just said, I can't do it. Let's go. We'll try another day. It's too long. Come on. Let's go, people. There's only one other person there who was getting helped, and they couldn't help me in 30 minutes. It's crazy. People want speed. They need speed. People are busy. They need 7 days a week too. Need the weekends. Can't have this. Well, it's Friday. See you till Monday. It's a weekend business. Most of these banks, credit unions, they're not even open on the weekends. Much less you're going to get a hold of somebody. How about it during the week? 6 p.m., 7 p.m. You know, those are times where people need to talk to their loan officers. So it's just funny to me that, you know, they would totally, and thank you, Sandra, you're amazing, that they would just put this out here and just blatantly lie. 4 best mortgage lenders that don't charge origination fees. Fees. Common fees associated with mortgage applications include origination fees. So, guys, these ads, I just wanted to bring this up because, you know, I see this stuff too. I know you're seeing it. I see it too. Relationships matter. Working with human beings, people who are accountable to you, matters. This is the best way to do business. Work with someone who's local, not sending profits to Wall Street or up some corporate ladder. That's the way to do business, not just in home lending, but everything. All right. I believe that's it. Better luck to us tomorrow. Hopefully, stock market, Maria, not in a good spot. Pray for us tonight. We're going to need some help tomorrow. And hopefully we bounce back. I do see, you know, good price action at the end of the day today. There is a nice looking little continuation here that's possible, but we're going to need some help tomorrow to hold this thing together. So let's pray for the best. You guys have an amazing evening. I'll be here if you need me. Take care, and I'll see you again soon.